and gentlemen, you're watching India Tonight with me, Sumita Karir. I'm coming to you live from our Delhi studios, and of course, joining us now also is my co-host, Shibani Garath. She's joining us from our Bombay studios. Shibani, a very warm welcome to you from today onwards, rather tonight onwards. We're going to be co-hosting the show together. So, ladies and gentlemen, let's put the spotlight then tonight on AI. Well, as artificial intelligence reshapes industries, a growing chorus of experts and industry titans is sounding the alarm bells, while AI valuations might just be dangerously inflated, risking a spectacular crash reminiscent of the late 1990s .com debacle. In fact, OpenAI's CEO himself, Sam Altman himself, has recently warned of a bubble forming amid surging investments. However, tech giants, they continue to pour in massive funds into AI infrastructure. OpenAI's valuation has ballooned to $500 billion, while NVIDIA's market cap has surpassed $5 trillion. And that really accounts for 80% of US stock gains this year. And that is driving AI spending towards the $1.5 trillion globally by the year end, isn't Shibani? So it does seem like the AI bubble is about to pop, but we'll have to speak to experts in just a short while from now.
Absolutely, and even critics like Ray Dalio and the IMF cite irrational exuberance, with 95% of AI pilots failing to deliver returns, fueling fears of 10 to 20% market correction, or even worse in the coming months. As investors grapple with this entire hype versus the fundamentals, one thing is clear: the AI gold rush could end in riches or ruins. Joining us today for this discussion, we have Sri Parthasarthi, CEO, Meta Vrush Consulting, Pawan Prabhat, co-founder of Short Hills AI, and Anurag Singh, who's a managing partner, Ansid Capital. All of you, welcome to ET Now. So my first question to you is to you, Sri. Sundar Pichai said that some of the investments in AI are very, very rational and some are extremely irrational in nature. What would you deem as rational investment in AI, and what would you deem as irrational?
I think right now, if I look at it, I think if you look at the trends of technology over a period of time, and this is not the first time that AI essentially has come to this kind of a hype. I think previously in the 90s too, AI essentially came up to a particular point, but since there was a big challenge in terms of the infrastructure and adoption, I think that is when it basically died. And then it came a full circle right now in the 2020s as AI starts to basically ascend. And the key thing is right now, I think there's definitely a significant convolution of various technologies which give the ability for AI to deliver on its promise. But I think where the big challenge today is even today in terms of the economic option of AI itself. And if I look at it for for any company, the big thing is essentially if you look at the high upfront costs and the uncertain ROI that basically is there, I think that's a big challenge. The other areas are, I think has been a significant hype in terms of productivity gains. But because of the big shortage in terms of AI manpower and ability to actually unleash the power of AI, that is where the big challenge is being faced by organizations. Large organizations are definitely investing a lot in this particular space, but smaller organizations are constrained because of the GPU costs and other things. So it's something like you are building something on promise of what can be in the future, but ROIs are still not being seen. And again, if I look at the overall AI infrastructure itself, AI infrastructure right now is limited to a select few. So what's happening is it's sort of not an open market in that space. So on one side, you have the consumers of AI, other side, you have the AI infrastructure and the people who are providing GPUs, I think, which is where there has to be a balance that needs to be struck
Absolutely.
if true
Absolutely, Shri,
productivity
some
and
very
other
valid
things have
points
to
that
come
you've
in.
made
Yeah.
with respect to high upfront costs and, of course, the productivity gains also that you spoke about. I'm going to come back to you in just a bit, but let me go across to Anurag. Anurag, always a pleasure having you on ET Now. Let's get in your opening thoughts on this particular matter. Now, global markets, we were just talking about that. They have been correcting, and global leaders are sounding alarm bells. OpenAI CEO Sam Altman himself, and that especially after pledging millions in this technology. So, is the AI bubble about to pop that we are seeing, and is this headed the dot-com way?
So, Sumita, good evening to you and viewers. Always a pleasure on being on ET Now. My connection is a bit glitchy, but I'll try and make my points. Look, I think it is unfair to compare it with the dot-com era because lessons have been learned from that phase. Dot-com, people were chasing eyeballs. There was no real revenue. And outside of Cisco, there were no real revenues of the business models that were being, kind of propped up at that time. And that is something that all came crumbling down. But I think out of that, when the winners like Amazons and Googles, they kind of captured good revenue, they got the valuation that they deserved. So there is a big difference. This time, most of the players who are investing money into AI, they have huge revenues, right? So all these, Amazons, Googles, Microsoft, Meta, Oracle, they have significant revenues as of today. Okay, so that is the first point, which kind of defies the point that there's no real revenue behind it. Okay, there it is. Second is, which is kind of the biggest point, which is that most of the investment into these data centers is coming from the P&L of these companies. So Meta, if it earns about 200 billion of revenues and about 70 billion of gross profits, what's wrong if it decides to invest about 40 billion of that into data centers, right? It can go wrong, that's fine, but it's an R&D expense. So we got to take it. But it's not that banks are funding it and they are going to be left holding the bag. So which is the important point here? Take it as an R&D investment. It might pay out. If it does, great. If it doesn't pay out, that's fine. Third point, what is a bubble eventually? I would define it as something which is valued 5x to 10x of its original value. Now, look at these 7 companies. They contribute about 35% of the S&P. So about 20, 22 trillion of the market cap of S&P is coming from these 7 companies, which are investing into AI. What if it drops by 30%? That's the most it'll drop, right? Say 30, 40%. So S&P from 100 drops from 100 to say 85. Well, that's not a bubble, right? That's a reasonable correction. So we can always make a point that, well, look, these companies are probably overvalued. Well, and maybe some of them are, right? But it's not in the bubble zone. You can have a 20, 30% correction, but that's not going to take the whole market down. Outside of that, OpenAI is something which we can all discuss. But even OpenAI, if we say it's a 500 billion valuation, there is a question, and I think I would just leave with this question. It has revenues of 15 to 20 billion today, and it is valued at 500 billion. Looking at the benchmarks, even in the IPO listings in India, is not a bubble. But point is, can it pay the revenues that it is committing to? That's an open question, maybe. So that is something we can deliberate.
Since you spoke about valuation, I want to ask you, what is your view on Nvidia's valuation? Is it primarily supported by fundamentals or driven, by this entire AI hype cycle, being one of the largest chip makers in the world?
So when Nvidia touched 1 billion for the first time, I thought it's kind of beginning to look overvalued now. And look, here we are, right? It is 4.5 trillion. Oh, sorry, 1 trillion. Okay, so from 1 trillion to 4.5. Well, look, it's a chip supplier. It's a hardware company. I agree. It appears indispensable as of now because everybody seems to be wanting only NVIDIA GPUs. But could a hardware company have such kind of valuations and gross margins? NVIDIA has gross margins of 75 to 80% today. Will that be priced out by somebody else, some other cheaper players, or maybe AMD or somebody else catching up? Well, possible, right? So I am more confident of the valuations that a Meta enjoys or a Amazon enjoys or a Microsoft or Google enjoys, right? That's more sustainable. Nvidia to me looks like a little bit of a frothy zone as of now, but
Right.
everybody wants their chips, so what to do?
All right. All right. All right. So you did speak about valuations, Anurag, and of course we're seeing some sort of correction also coming in. I have some data here. Intel is also corrected by over 18%. In fact, Adobe has corrected by a massive 42%, Meta by 25%. So definitely there is some froth as far as the AI and the chips ecosystem is concerned. But let me take that question to Pawan Prabhat. Pawan, we often hear the term that AI essentially is an arms race, and of course chips are the new oil. But what really exacerbates this fear of AI being in a bubble is the fact that China is essentially building some of these models at a fraction of the cost that US companies are building.
Uh, so I think on that, frankly, nobody knows at what cost is China building these new models. I mean, when we're talking about DeepSeek, it was through the
Concerns that
chips
AI
which were,
might be in a bubble, although Anurag will completely disagree from this.
I beg your pardon.
I'm saying, but wouldn't that exacerbate concerns that AI is in a bubble? Although Anurag, like I said, he will disagree with this, and he said that there's just going to be a fair bit of correction as far as AI stocks are concerned.
Oh, I totally, agree with everything that Anurag had said. And in fact, my general view is that when we say or think of bubble, essentially we are thinking about overvaluations. That's what bubbles, mean in my view. If you look at the ground reality in terms of how things are really changing, if you look at how tech companies are operating, especially if you look at companies like Infosys, large services company, the whole way the corporates are using AI to change their workflows, it is changing. It is also true that the ROIs haven't really been established very clearly yet. But I guess if you talk to any CTO, any CIO, any CEO of these companies, they'll tell you that things are changing. They are not hiring that much because AI is able to do certain automation tasks, summarization, research. So I think on the ground, it is a force. It will show its ROI in due course of time. And like any new technology, there is a hype cycle, there are over investments, there are overvaluations, which Anurag rightly pointed out. I wouldn't also really think too much about an AI bubble getting burst. Some companies which have got very high valuation, their valuation will come down. I mean, just like it went up, it will come down. It doesn't really change the world. Some of them would make money in this process, some of them won't. But frankly, I don't see it as much of a large AI bubble anywhere. And just to answer the question on China, frankly, nobody knows, how they're collecting the data. Are they having any kind of guardrails? What kind of measures they're taking to show that these models have been built at a low cost? We don't know. So, frankly, I think it's difficult to comment.
Also, Pawan, many of these, hype cycles and, bubble, it's not just about money, but the kind of expectations what AI can deliver. Also, many a times it's FOMO-driven, market rather than a fundamentals-driven one. For example, 2 to 3 years ago when I was at CES, the whole conversation was, AI is something that, you look forward to. Last year, CES, Consumer Electronics Show, was absolutely all about AI. This year, many conversations around agentic and how agentic is shaping organizations. So can you tell us more whether it's FOMO-driven market right now or fundamentals-driven one?
If I would agree if you only look at sample of smaller companies, right? I mean, startups, entrepreneurs, they have to be optimistic to, do something. But they might really be worried about FOMO. I mean, but look at large companies. If you look at the kind of hiring which all the big guys in IT services used to do every year, north of a couple of lakhs, those numbers have gone down substantially. Now, these companies are mature enough, big enough, not to be just worried about FOMO. I mean, they are people who are very smart. They've defined the industry. So I think if you look at how they are performing, how they are hiring, how they are planning, how they are upskilling their entire workforce, I wouldn't say that they are doing it out of FOMO. Not everybody will do it out of FOMO. So I think that whole idea that, yes, everybody's trying to jump onto it because of FOMO. I think that's not the case in reality. And the same also applies to very large companies which are not in IT, large manufacturing companies. I mean, they are taking cautious steps. And as I think one of the speakers pointed out, the ROI has not been established a lot. That is true. In some cases, it is getting established. In some cases, it is not. But
Absolutely.
again, I don't think it's FOMO.
Absolutely.
I mean, people will expect more. I mean, otherwise, nothing will move in this direction.
Absolutely. And essentially, so you're suggesting that it's been a fundamentals driven market, the kind of interest that AI has seen, and of course, on the back of the kind of investments that we've seen, not just being made by companies, but by nation states themselves, like the United States, for instance, when Donald Trump came back to power, the kind of investments that he announced in the AI ecosystem is for anybody to see. But speaking about geopolitical developments as well, Sri, could chip export controls or restrictions or geopolitical tensions, will they end up, you spoke about very many challenges, but will these geopolitical tensions and how China really moves, will that cool the AI investment cycle?
Definitely, if I look at it and pick up the word that you use, arms race, right? I think today when I look at AI, it's definitely arms race. It is the haves and have not. Let's go back to the railroad era in the US. What happened? Auto companies wanted to basically pick up. They pretty much ripped apart everything from a railroad perspective, and they constrained everybody to start using cars. And then when electric started coming in, everybody from an oil perspective wanted to move to lithium and everything that way. I think what right now is going to happen is, I think if you really look at AI from an adoption perspective, the biggest challenge is going to be in terms of its availability to, I would say, not the big giants alone, but to also the smaller companies. And I've spoken to several AI companies who have moved into this particular generation, but struggle right now in terms of the cost. Yes, they all moved into that, but then feel in terms of sustainable costs are very tough. Now coming to in terms of aspect of China and looking at nation states, I think AI is a technology that nation states are wanting to control, and which again, uh, unless it's coming to a particular what I would call as I think when I look at what Anurag and Pavan are saying, I think the trends and the markets are definitely creating that particular hype, and every CEO hesitates because it's the most sexy word right now to say that, hey, I'm not using AI. I think many CEOs are hesitating even to say that. And if you as I basically work with a lot of companies in terms of digital transformation, are they truly sort of leveraging AI and building out the kind of workflows and other things within their particular system? No, I think they're still struggling. People are struggling just like how there was an initial adoption of cloud. So I think it will take some level of maturity, and for some of the companies to sort of come down from their particular perch and offer these particular services at a more consumable level rather than essentially keeping it at the sky high level, because of which they have such high valuation.
Shri, Pichai also made a very interesting point during this conversation where he said that Google is better positioned for many years because of the kind of full stack control that they have, from chips to model deployment. So, this entire vertically integrated model, is it the greatest defense against like a future downturn, is what you see?
I'm not predicting a future downturn, but I think it is something where when I look at Mr. Pichai and I look at the other people who have been speaking about it, and starting to see it in terms of, I basically travel the world. I've seen several countries. I've been in Africa, I've been in India, Middle East, US, and other thing. I can see that some of the more advanced countries, the adoption possibly is much faster. And coming back to the single stack that you're talking about, I think right now, if you really look at those particular vertically integrated chains and to build some of those particular processes and also use the people process technology from that aspect, I think it's still very sustainable. And for us to really what you call do that particular capex investment and get into AI, I think a lot of companies are hesitating, and which is one of the reasons why, if I look at Google's range of technologies and what they are trying to do without even usage of AI, I wouldn't say they're not using AI. They are using a lot of AI, but at the same time, it's sort of balancing it out between the capex and opex, what they are primarily doing, and also leveraging some of the core infrastructure that they have.
Right, Sri, so you're suggesting that there's going to be a bit of a lull as far as capex investments are concerned over the next, a couple of years is essentially what you're stating. But let me come to you, Anurag. Anurag, you essentially also were hinting at a possible correction because of the froth building in all of these stocks, in chip stocks, AI stocks. But at what point will investors start becoming more selective instead of throwing money at anything that's labeled AI? And where do you essentially see value being created if we talk about this whole AI and the chips bubble?
Yeah. So, Sumita, first is, by the way, just a brief comment on what Sundar said. If there is one company that faces a threat, real threat from OpenAI, that is Google. Okay. And if you've lived through, I've lived through generation where I moved from Facebook, and I, eventually quit. But generation changes very quickly. A generation of Instagram doesn't touch Facebook. They might be of the same company, but they just move on from there. The current generation doesn't know Google. The teenagers in US use only chat GPT or other Perplexity and what have you, right? So that is the real threat, and that's where I think Sundar might be coming from. Second, by the way, I just quick alert, I just checked on chat GPT. Is AI a bubble? Chat GPT says no, it's not a bubble. So there. Finally, by the way, on a serious note, Sumita, look, there is a question, right? So one, there is a question about circularity of revenues. Yesterday we heard NVIDIA will invest 10 billion in Anthropic. What will Anthropic do of this 10 billion? They will buy chips from NVIDIA. We saw the similar fate between Oracle and NVIDIA, right? A $300 billion contract for 10 years where NVIDIA will invest in Oracle. And what will Oracle do? Well, by the way, they will buy NVIDIA chips from there. So there is some of that circularity, and about $800 billion invested since 2023. Questions are raised as to where will this money come from? Well, I can give a clue. Microsoft and Google both have raised their enterprise services fee to my firm by 30% in the last 1 year. And I quickly realized I don't have any option for that, right? I will have to pay that. There's no alternative. So these companies have a very strong moat. Eventually, they will recover that money from consumers and customers who basically have no alternative, right? So eventually, we might say one or two companies might fail, but collectively the system would survive because they're much more cautious and very revenue backed lending is happening in this place. So this space, right? So in terms of customers, the investors being cautious, well, they should be cautious all the time. Stick to the larger ones, which have a very strong revenue and the revenue moat, the companies that I mentioned, which are big seven. Outside of that, if heckling into the quantum computing space and the companies which have basically no revenues and all story, that's always going to be a bubble. But I think such stories exist in the markets all the time. So we don't have to worry about such small companies because they're not a systemic risk to the markets.
Anurag, at what point in time can you tell that, many of these tech companies and tech players are entering, or we are entering, that AI bubble territory?
Well, if you ask me, should these companies be 25 trillion collective valuation, all the big seven companies? Well, probably not, right? US economy is a $30 trillion economy. So they already are in a bit of a speculative zone. And what is the speculation about? It is about the future revenues that will come out of this. It will be, AI is real, revenues will be incurred in future, but they will not be as rosy as the markets always are, right? It will be somewhere, reality will lie somewhere in the middle. So they might already be 20 to 30% overvalued. That is for sure, right? For all these, even the mega tech one, mega cap tech, they might be 20, 30% overvalued from the current levels. Outside of that, of course, Nvidia's and of the world could correct even more, right? Was OpenAI in a bubble? Well, of course it is, right? So, who will invest in $1 trillion IPOs? So that's a bad call all the time. So I don't know what levels I can tell you, but can Nasdaq correct 20% from here any day? Well, it can. Of course it can, right? The moment we saw this in, the DeepSeek story, the moment the DeepSeek model came in, somewhere at the end of 2024, the valuations corrected by 20% of all these players quickly, and then they've rebound from that level. So that you can always expect, but that's not a bubble, right? That's a healthy correction that the market should undergo all the time.
Right. Right, Anurag. So essentially, a healthy market correction is what you're bracing in as far as this entire AI sector is concerned, and of course, the overall chips ecosystem is concerned. And rightly so, given the fact that the kind of investments that we're seeing from various different governments here in India as well, the India Semiconductor Mission Part 2 is about to come as well. But let me also ask Prabhat about, if indeed we are in a bubble, as many suggest, as many CEOs have been claiming, what are the larger implications for the global economy that you foresee and on consumers?
I mean, if indeed we are in a bubble, then the larger implication for the global economy is bad. I mean, again, but that essentially, is determined by the assumption if we are in a bubble. So yes, we are in a bad situation, and by the same token, the consumers would be in a bad shape, jobs would be lost. So I guess the only answer is both will be at a loss, and we'll be in real trouble if we are in a bubble.
And, having said that, what and how and what is the action government and regulators take and to be sufficiently prepared for this particular scenario?
I think we had this bubble for mortgage crisis, right? And that was a bubble for banking. So you could do quantitative easing, you could put restrictions on the banks. In this case, if everybody is going down, I mean, the government or anybody else, I don't think they can go and rescue large tech companies because they're in a bubble, and think there is no need to do that as well, because unlike banks, tech companies do not power or run the entire ecosystem. Even if they do, and the large giants, right, they can always cut off the costs by laying off people, which has already started. If you look at Amazon, they let go around 7,000, 8,000 people in the US. Similarly, Microsoft has been doing that. Our Indian companies aren't hiring. So I don't think the government has to do much for containing anything in AI bubble. The companies which mostly would have, propagated this bubble, they themselves will take the hit, correct themselves. They will go down to normal valuations. All of them had hired a lot of people during COVID with expectations. All of them, let us say, are doing investments in expectation of AI becoming the only piece of technology that matters. So I guess the government need not do much. The companies will take care of themselves.
Absolutely. Pawan, let me also get in Sri for that one final question, because we're completely out of time on this edition of India Tonight, particularly on this chat. Sri, your final thoughts on the kind of geopolitical disruptions that we're seeing, and how vulnerable is the AI sector to these supply chain disruptions? Because, just in the past couple of months, we have seen the US-China trade war and how that has really played out as far as the rare earth material segment is concerned. And that's really choked the supply of rare earth materials to some of the very critical sectors as far as the United States is concerned. So how vulnerable is the AI sector to these kind of supply chain disruptions, given the fact that we've still not seen a deal being struck between the United States and China?
There's 2 points that I heard from Anurag and one from Pawan. Anurag talked about Microsoft and where he felt constrained in terms of Microsoft actually increasing the prices. I think that's the fundamental issue that I'm talking about, where there's an over dependence on a concentrated supply chain. So, which essentially is where the number of people, and I think it's an unequal economic distribution from that aspect. The other point that Pawan talked about in terms of AI and bubble burst and job loss, their jobs are already being lost because of AI. But if there's an AI bubble burst, I think a lot of people will start getting jobs because the dependence on AI will go down, and there's going to be a lot more people who will possibly come back into that particular segment. Now, coming back to the main question that you asked in terms of geopolitical, I think AI, quantum, and others have a significant effect on what can be done in terms of disruption of cybersecurity, disruption in terms of the economic markets. And the moment they start getting controlled by nation states, and the moment they start getting controlled by these particular larger companies, which basically pander to those particular nation states, I think that's where the challenge is going to be when we really start thinking about geopolitical issues from that aspect. Because even today, if you look at uh, there are, yes, any technology when it comes up, there are ethical issues and other things. But I think today, if I look at AI and the challenges that organizations are facing, everybody's talking about AI, security, governance, and all of those particular aspects. And with AI, quantum essentially combining together, that could be a power force much worse than what I would call as a nuclear power, and which is where I think it has to be used very, very carefully.
Well, thank you so much, Sri, Pawan, and Anurag, for joining us today. It is time for us to take a short break. You don't go anywhere. We will be right back.